The Super Bowl is set to begin on Sunday, with football and entertainment fans ready to enjoy another spectacular show. And if you're an investor, you might want to pay close attention as well. That is, if you believe in the Super Bowl indicator, which is said to suggest that stocks can rise and fall depending on which team wins. Market strategists have found the S&P 500 has performed better when National Football Conference teams win. But can the market really be manipulated by the outcome of sports games? Well, joining us now to give us more insight into what exactly a Super Bowl indicator is Brendan Caldwell, Director of Caldwell Securities Ltd. Brendan, welcome back to Forum Daily.
Thank you very, very much, Nima. Good to be here. I'm at Earl's Sports Bar at King University enjoying my Diet Coke.
Very fitting to the theme. So, Brendan, what exactly is a Super Bowl indicator and how accurate is it?
The theory was, as you articulated, that if the NFC, the National Football Conference, wins, then the stock market will go up the next year. Now, the theory was started in 1978, and it had been an absolutely perfect indicator if you consider the Pittsburgh Steelers to be an NFC team because they were part of the original NFL. So you got to hedge a bit. But in the last number of years, hasn't been a good indicator at all. In fact, go back to the 2008 Super Bowl, things got really, really ugly after that for the markets, even though the New York Giants and NFC team actually won the game.
Well, taking that into consideration, how much of an impact does something like the Super Bowl have on the markets, and does it have the same impact on all stocks?
Well, no and yes. You see, the interesting thing from an analyst point of view is that you can get all kinds of things that you think have a causation of the market simply because there's correlation. You know, markets have gone up always because of this or that or the other. There's in an election year, if the Republicans win, the market's supposed to go up, but not if the Democrats. Different things like that. So, but correlation and causation aren't the same thing. It does seem, though, that the companies that advertise in the Super Bowl tend to do a little bit better than others. We'll see.
All right. So, Brendan, what team should investors root for? One from the NFC or the AFC?
Well, they absolutely this year should be rooting for the LA Rams. So I've dressed as far as I could in Rams colors, the gold and the blue. But the other team is the Cincinnati Bengals. Both have a claim to underdog status. Never have two teams seated so lowly in the standings actually been the ones to do battle in the Super Bowl. So if you want to root for the Bengals, who spent 20 years being known as the Bungles, then I can understand your point of view. But from a stock market perspective, LA Rams all the way.
And you mentioned earlier about advertisers. We know the Super Bowl is super famous for its advertisements. So what kind of impact do ads have on the stock market?
Well, I don't know about the stock market, but in Canada, it makes us a little nostalgic or wistful that we can't get the American ads up here. So only in America, pity. But at least in the short term, it does tend to give a boost to the companies that advertise in the Super Bowl. What's interesting this year is it's expected that a lot of crypto type companies, Coinbase, CoinSquare, these different companies are going to be advertising on the Super Bowl. The last time we had a big technology push on the Super Bowl was 2000s when all the .com companies were advertising. So I think in the very short term, the next week or two, you may see an outperformance of these companies. Over the next year, it might be an indicator that these particular sector has topped out. At least for the next year.
All right, Brendan. And what about after the Super Bowl? What happens to the stocks after such a huge event?
Well, again, correlation and causation. It doesn't necessarily mean that anything particularly is going to happen. But I think investors, as a general rule, shouldn't feel that just because of a particular thing like sell in May and go away, or there's always a January rally, or this always happens, or that always happens. It doesn't. Especially when you say it out loud. As soon as a trend is articulated, it means that probably everybody's already jumped on it, and whatever happened in the past won't happen in the future. But I think the thing to watch is it costs so much money to put a Super Bowl ad on. I think $7 million this year, that anybody spending that kind of money, maybe hubris is set in, and it might be a tough year for those companies. So that's my only short-term, medium-term prediction.
All right, lots to keep our eyes out for, Brendan. Thank you again for joining us today on Forum Daily.
Thank you, Nima. Go Rams.